is a pattern that with constant practice will establish you as a binary options, as a professional binary options trader. Okay, so basically this pattern incorporates all we've been learning from day one till today. Okay, so it incorporates the candlesticks, um, the support and resistance lines, the Bollinger Band, the RSI. Okay, so this strategy is basically the coming together of all the concepts that you've learned over the past few days. Okay, it is the compilation, compilation of those concepts and indicators to produce a system that will produce profits in the long run. Okay, so let's go in straight to the pattern itself. The pattern is called the Amster pattern. It's actually a strategy. It's a strategy of trading the market, and this strategy has been validated to trade binary options. It has also been validated to trade stocks. It has been validated to trade commodities. It has also been validated to trade forex. Okay, so a good mastery of this strategy will position you as a master of whatever instrument you choose to trade. Like we mentioned earlier, binary options trading is the most sophisticated, is the most engaging, is the most specialized form of trading. And so we recommend that new traders or intermediate traders use this particular strategy, the Amster strategy, the Amster pattern, to trade CFDs, stocks, to trade commodities and forex, because it is reserved, binary options is reserved for those with some measure of experience in the financial market. Okay, so but nevertheless, learning to trade binary options will position you as an authority in the financial market. So I'm so glad once again that you guys are here today, and I'm so excited because at the end of today, each and every one of you will go back home with a system that multiplies money exponentially. You'll be going back home with a system that is tested and trusted to deliver. Okay, so basically the Amster pattern is a pattern that was developed and validated by the Binary Options University, and it took us more than 6 years to test and validate and endorse this strategy. So that's why we can say with so much confidence that this strategy is very, very effective. Okay, so the Amster pattern can be used to trade binary options. It can also be used to trade forex. It can be used to trade stocks. It can be used to trade commodities. Okay, so the only difference is the mechanisms of exiting these various instruments. Okay, so they all have the same entry, but the criteria for exiting these instruments vary. Okay, so we are going to be talking about focusing more on binary options. Okay, but before we go ahead, I would like us to um, learn the principles guiding the Amster pattern. Okay, so basically, the Amster pattern is by far the best way to trade binary options. Okay, considering the spatial distribution of support and resistance lines or levels in the market. Okay, so in the early days of trading and training, we discovered three excellent phenomena. The first of which is the trend will always end. The trend is not always your friend, and you can beat the crowd by capturing them when weakened. So the Amster pattern basically is a very, very accurate way of trading the market. These discoveries would later form the underlying principles of the Amster pattern. Everything obeys the law of gravity, as it is considered the greatest force in nature. Whatever goes up must surely come down. Fundamentals such as news release are the drivers of the financial markets. Candlestick patterns as seen on the chart are reactions to the real life events. Okay, when a company is profiting from sales, it is only logical for such companies or such a company to trend upwards. Okay, but in reality, customers never continue buying at a high rate. They either switch to a cheaper competitor brand or reduce the purchase frequency. That's when demand pushes the price up. The Amster pattern is premised on this consumer behavior. And so the Bollinger Band, support and resistance lines, RSI, and candlesticks make up the Amster pattern. Okay, so before we delve into the pattern, I would like to um, inform you guys about the important things or the regimen or the daily activities you must embark on before you venture into trading. Okay, so before you start trading, you must go through the fundamental data so as to ensure that um, your trade does not clash with a news release. Okay, so this is technical analysis, but you must respect the fact that fundamental analysis is what governs the market. Okay, so fundamental data is what drives the market, so you don't want to go against the driver. Okay, so technical analysis is taking advantage of the market reaction to profit from the market, but fundamental data should not be taken lightly. Fundamental data carries very heavy um, has a very heavy or big impact on the market. Okay, so it has very high significance. Okay, so before you start trading in the morning, make sure you visit forexfactory.com to browse through the data that will be released that particular day, and so that you can guard against um, unusual volatility. What I mean by that is you do not trade during those periods. Okay, so if a news release will occur at 12-hour GMT. Make sure you give 10 minutes before and 10 minutes after before you enter a trade. Do not trade during the news release. Okay, very important, because those periods are at times when the market experiences a sudden surge in volatility. Okay, so let's go in straight to the pattern. So the Amster pattern utilizes the relative strength index, the Bollinger Band, and the candlesticks. Okay, so what you're looking for is a time when, and by the way, this is the 5 minutes expiry. Okay, as we discussed earlier at our previous lecture, I told you guys that whenever you're using a 15-minute candlestick, your expiry should be 15 minutes. Whenever you're using a 5-minute candlestick, your expiry should be 5 minutes. Okay, so this is a 5 minutes candlestick, and so because it is a 5 minute candlestick, our expiry is 5 minutes. Okay, so what you're looking out for is someone asking how to set the Bollinger Band indicator. Okay, so you could easily go to the sidebar. This is where you add an indicator. You click on this, and the indicator list will pop up, and so you can add all the indicators, add your Bollinger Band, add your RSI, and this will be the setup. Okay, so this is a New Zealand USD chart, and so there was a very perfect setup, a very good opening for a trade. Okay, for a put option, that is a trade down. Okay, so what you're looking for in the Amster pattern is for a strong move up or down. In this case, you can see the strong move up. Okay, you're waiting for price to move strongly, either in the uptrend or in the downtrend. Okay, so you want price to shoot up like this in an uptrend or a downtrend, and then there should be a corresponding rise above this RSI 70 line, this green line over here. This is the RSI green line. That's the overbought region or area. Okay, so you're waiting for price to shoot up and pass this green layer, this green boundary. Okay, so price goes up and there is a corresponding increase or cross on the RSI 70 overbought level. Okay, so you are looking for a cross, a strong trend, either up or down, and the trend must cross the RSI 70 level, and the price must also cross and move out of the Bollinger Band. You're waiting for the price. You can see the candles, the bullish candles. You can see the Marubozus. The Marubozus are crossing the upper Bollinger Band. You can see it crosses clearly the upper Bollinger Band. You can see it's so clear. It crosses clearly the upper Bollinger Band. The first one crossed clearly, and look at the second one, the second candlestick. The second candlestick crossed clearly. So you're waiting for a cross out of the Bollinger Band with a corresponding cross on the RSI. Okay, so when you see that, it indicates that there's a strong momentum in that particular direction. Okay, this indicates a strong bullish momentum, meaning the bulls are fully in charge. Okay, so what you're looking for next is a retracement. A retracement is a cut back into the Bollinger Band. So you can see this level. This is a resistance level over here. If you can remember what we learned the other day, the pair of jeans concept. This is a level where there is great resistance over here, and the ladies are resisting buying. Okay, so this is a strong resistance level, and so you're waiting for a cut back from a strong resistance level. You're waiting for a cut back into the Bollinger Band. Okay, and so the cut back is called a retracement into the Bollinger Band, and you are waiting for a formation of a support level. You remember the pair of jeans concept. The support level is over here. This is a level where the ladies find the price interesting or attractive. Okay, so you're waiting for a cut back into the Bollinger Band. So you can see it. There's a clear retracement, a clear cut back from this strong resistance level into the Bollinger Band to form a support level over here. Okay, and so after that, you're waiting for a trend continuation. You are waiting for the price to rise back up from this support level down here. You are waiting for price to rise up. Okay, so you are waiting for price to rise up. Let me indicate it with a check mark. Okay, so this is the level. This is one level over here. This is one level over here. Okay, let's put it over here. Okay, so you're waiting for price. You're waiting for price. You can see this level. This is the strong support level. You're waiting for price to rise above this level. Okay, and so you're waiting for price to rise above this level and for the price to cross the previous resistance level over here. Okay, so you're waiting for price to rise from the support level and you're waiting for it to cross. You're waiting for it to cross this particular resistance level. Remember, this is the level where the ladies resisted buying. Okay, so you're waiting for this price to rise from this support level down here to rise and cross this resistance level. You can see this bullish Marubozu. It clearly crossed this level. You can see the level. It clearly crossed this level and crossed this level and formed a new high. So this is what we call a higher high. Okay, so from what we learned about the divergence, you can see a divergence is when a higher high on the chart is forming a lower high on the RSI chart, you can see clearly that at this level, price crossed the 70 RSI line. Okay, so this level is the lower high. This level over here, remember the price, the Marubozu, this price has crossed this resistance level to form a higher high over here. Okay, so this higher high does not agree with this RSI level over here. So if you draw this level down, you will realize that the RSI formed a lower high. Okay, so on the chart you are having a higher high, whereas on the RSI chart you are having a lower high. You can see this level is lower than this level, so it's lower high, lower high, higher high, higher high. Okay, so there's a rise on the chart and there's a fall on the RSI chart. Okay, so there's a rise on the candlestick chart and there is a fall or a decline on the RSI chart. There is a rise on the candlestick chart, whereas there's a decline or a fall on the RSI chart. I'll say it one more time. There is a rise. There is divergence is when there's a rise. Okay, in an uptrend. In a downtrend, that's the opposite is the case. Divergence is when there's a rise on the candlestick chart and then there is a decline or there is a fall. There is a fall on the RSI chart. Okay, so you are waiting for a divergence to form. So this divergence has formed. So you're waiting for the divergence to form, and then you're waiting for a confirmation candle. Okay, you're waiting for a confirmation candle to form immediately after the divergence. Okay, so you can see over here the divergence had formed here and the confirmation candle confirmed the divergence. Okay, so this red candle indicates strong bearish momentum. It tells us that the sellers are in control. Okay, so let me add a check mark so you can actually see what I'm talking about. So this level over here is when the bearish momentum picked up. So you are waiting after a divergence, you are waiting for a confirmation with a candle that we lent the other day, and the confirmation candle can be a Marubozu. The confirmation candle can be a hammer, can be a shooting star. The hammer is where in a downtrend. The shooting star is in an uptrend. Okay, so you are waiting in an uptrend, you are looking for a Marubozu, a red Marubozu. Okay, indicating that the bears are building momentum. Okay, so you are looking for the confirmation candle, can be a shooting star, can be a star, or a Marubozu. Okay, never trade a spinning top, never trade a doji. Okay, so you are waiting for a confirmation candle, which can be in an uptrend. The confirmation candle can be a Marubozu, a red Marubozu, or a red shooting star, or a red star called an evening star. Okay, so this is what you're looking for. Okay, so this is the confirmation candle immediately after a divergence. Okay, so the confirmation candle is what confirms the divergence. You can see it. If you trace it down, you see that the confirmation candle, the Marubozu, formed almost immediately after the divergence. Okay, so this is what confirmed. The Marubozu candle confirmed the divergence. Okay, it confirmed the divergence. Okay, so you do not enter the trade immediately. You wait for one more thing to happen. You wait for price to cut back to the high, to the upper body of the confirmation candle. Okay, so this Marubozu is the confirmation candle, and the entry was confirmed when this confirmation candle, when this Marubozu, this red Marubozu formed. But you cannot enter immediately. You have to wait for a cutback or a retracement, a cutback or a retracement back to the higher body, the upper body. Okay, so the upper body of the Marubozu is over here, very close to the check mark here. Okay, so you want to wait for this. The entry was already confirmed here, but you do not want to enter immediately. You want to give yourself the best possible distance, so that you can have an edge over every other person in the market. Okay, so you are going to wait, always wait for a retracement. So you wait for a retracement back to the level, to the upper body of the confirmation candle, which is this Marubozu over here. So you have to wait, always, never trade immediately after the confirmation candle. Never trade immediately after the confirmation candle. Always wait for a cut back to the upper body of the confirmation candle. Always wait for a cutback to a cutback. Always wait for the cutback to the upper body of the confirmation candle. Okay, so you can draw a line over here, and as soon as price retraces and cuts back, look at the green candle. This is a cutback. The candle moved from this level. You can see it. The candle moved from this level over here. The entry was here, but you cannot enter here because you want to enter at the best time, at the best position, and at the best time in the market. Okay, so you will wait for a cutback. You wait for price to cut back and touch the upper body of the confirmation candle, which is this Marubozu over here. So you wait for a touch. As soon as price touches the upper body of the, as soon as price retraces and touches the upper body of the confirmation candle, which is this Marubozu, you place a put, a sell trade, and then the expiration time should be set at 5 minutes. 5 minutes. It must be a whole 5 minutes, not 4 minutes, not 3 minutes, not 2 minutes, not 1 minute. The expiration time must be 5 minutes. Okay, must be a whole 5 minutes. You must enter at this point and set the expiration time at the next 5 minutes. Even if there is about 3 minutes remaining on the broker's platform, do not select the 3 minutes. Do not select the 2 minutes. Do not select the 1 minute. It's better to have 5 minutes plus 3, that's 8 minutes, than for you to select 3 minutes. So always select a full 5 minutes. Okay, so So it can be 5 minutes, it can be 8 minutes, it can be 9 minutes. Never select 4 minutes, never select 4 minutes, never select 3 minutes, never select 2 minutes. The expiration time must be 5 minutes plus something, or 5 minutes, exactly 5 minutes. Okay, so the expiration time must be exactly 5 minutes, or 5 minutes plus 3, that's 8 minutes, or 5 minutes plus 4. Okay, so it's better for the expiration to be higher than 5 minutes than for it to be lower. Never trade an expiration lower than 5 minutes. Okay, so as soon as price retraces from this level, from the lower level of your confirmation candle, and goes back up to the upper body of your confirmation candle, you place a trade at the touch of the immediately it touches. You don't wait for the candle to close. Immediately it touches the upper body of the confirmation candle. Enter the trade immediately. You are just looking for a touch. You just want a touch. You don't want price to close. You don't want the price to close. You just want the price to move back up and touch the upper body of the confirmation candle, which is this Marubozu, the red Marubozu over here. Okay, so when that happens, you'll be guaranteed of a winning trade. Okay, you'll be guaranteed of a winning trade. Okay, I'll say one more time. You'll be guaranteed of a winning trade. Okay, so it's 90% accurate. You will win 90%. That is 9 out of 10 times. 9 out of 10 trades. So it's very, very, very accurate. Okay, so you can see the way price moved as soon as it retraced back to the upper body of the confirmation candle, which is this Marubozu, the red Marubozu over here. You can see how price moved down almost immediately. So you see the next candle, next 5 minute candle was a winning candle. Okay, so you trade down. You are trading down. You are trading against the trend. You are trading a reversal. Okay, so you are trading down. As soon as price hits this level, you trade down. You place a down trade. You place a put option. You place an option to sell. A sell option. Okay, so you see it, the price moved from this level down. It was a clear winning trade. Okay, so this is how to trade. This is how to trade successfully. This is the winning strategy in the binary options niche or industry. We've tested several other strategies, but we've discovered that this is the most accurate of them all. Okay, so this is 90% accurate. You will surely win 90% of the time. Okay, so you will win 9 out of 10 trades, guaranteed. Okay, so let's move on to other examples so that you can understand the concept more. Okay, so let's move on to this. This is an example. It is a typical example of the hamster pattern in action in a downtrend. Okay, so you can see according to what we described earlier, you are looking for a strong move out of the Bollinger Band. You see price moved down and it moved out of the Bollinger Band, and so you're waiting for a corresponding move out of the 30 RSI level, which happened here. And so you want price to retrace back into the Bollinger Band, which happened here. Price retraced back into the Bollinger Band, and so it retraced back, and it happened over here. And so you want the trend to continue with a break of the previous support level. Okay, so you can see clearly that the price, this candle broke the previous support level. So you want price to break the previous support level. You want price to break this previous support level and form a lower low. Okay, in the case of a downtrend, is a lower low. Okay, in an uptrend is an higher high. Okay, so you want a lower low to be formed. So when the lower low is formed, okay, you look at the RSI, you can see there's a corresponding divergence. Price moved, okay, on the chart, on the candlestick chart, you can see price formed, the price formed a lower low, but you can see um, on the RSI chart, you can see the price formed. You can see this level is higher than this level, so the price formed a higher low. Okay, so you can see whenever there is a difference or disagreement between the candlestick chart and the RSI, that is called the divergence. Okay, so you wait for a divergence. The divergence is confirmed by this confirmation candle, this hammer over here. So you see the hammer has formed over here. So what you want to happen is a retracement. You wait for price to retrace. You wait for price to retrace to this level, to the lower body of this confirmation candle, which is the hammer. Okay, so you wait for price to retrace back to this lower level of the confirmation candle. As soon as price retraces, you trade the next 5 minutes. You don't trade the current 5 minutes, you trade the next 5 minutes. Okay, so that will be about, it can be 9 minutes, but make sure you trade a full 5 minutes. Don't trade 4.55. Don't trade 4 minutes 55 seconds. Never trade 4 minutes 54 seconds. Never trade 4 minutes 59 seconds. Trade a full 5 minutes. It can be 5 minutes plus 3 minutes. It can be 9 minutes, but make sure that the 5 minutes expiration is complete. Never trade 5 minutes that is less 1 second. Okay, make sure you trade a complete 5 minutes. The expiration must be 5 minutes. Okay, so you can see after 5 minutes, you can see what happened, that it's in the morning. So you actually placed a call option. That is an option to buy the asset at this point, and then after your expiration, at the end of your expiration time, you can see that you actually want this trade. Okay, so it's a 90% guarantee. You're going to win 90% of the time. Okay, so 9 out of 10 trades, you're going to win. Okay, so let's move on. Okay, this is the Euro Great Britain pounds, and then you can see that it is 5 minutes candlesticks, which indicates 5 minutes expiry. Okay, so you can see that there's a strong move up, a break of the Bollinger Band. The bands were broken. Okay, so the price moved out of the Bollinger Band, okay, and then retraced back into the Bollinger Band, and then crossed. You can see price crossed the previous resistance level. Clearly, you can see a clear cross of this particular level. You see this level. Okay, so let me put a check mark there for you to see the level. You can see the level. This level is a strong level. Over here. Okay, so that is a strong level. Is a strong resistance level. Okay, so you can see the price crossed clearly. There was a clear cross of this level. Okay, so you want the price to cross this level to form a higher high. So you can see this is a lower high. This becomes a lower high. As soon as price crosses this level, this place becomes, the previous high becomes a lower high, and so you can see a higher high is formed over here. Okay, so and then you must make sure that before the confirmation candle, price does not cross clearly the Bollinger Band. Okay, so as you can see, price crossed the previous resistance level to form a higher high. So this is the lower high. This becomes the higher high. Okay, so let me put a sign for you to identify it. Okay, so you can see that price formed the higher high over here. Okay, so now what you want to do is to trace it down to the RSI. You can see price clearly crosses the 70 RSI level. You see it is an indication of strong momentum, strong upward momentum. Okay, it tells you that the bulls are fully in control. Okay, so you want price to cross the RSI level, and so you want a cut back and then a cross above the previous resistance level. Okay, so and so you want to trace this one down here. Let's move back up. I think we are faster than okay, sorry about that. Okay, so you want price to, okay, let's trace it back to the support level, to the resistance level. You can see that on the RSI chart the price did not go higher. The price went higher on the chart, but on the RSI price did not go higher, so it was on the same level. So that is also a divergence. So if price on the chart forms a higher high, so if you're seeing a higher high on the chart, on the candlestick chart, and then you are not seeing a transition on the RSI, you are seeing either a plateau or a flattening slope or a graph. Okay, meaning that the peaks are on the same level, or you see a lower level. Okay, so for instance, you can see there is a higher high formed there, whereas on the RSI you can see that the price is close to a lower high, or is almost the same level as the previous high. So whenever you see something like this, it doesn't agree, so it's a disagreement. Ideally, if price goes, if price is shooting up, if price on the chart, if you're experiencing or you're seeing on the chart that price is moving and forming a higher high, the RSI must also form the higher high. So whenever the RSI does not correlate with the movement on the candlestick chart, you call that situation or phenomenon, you call it a divergence. Okay, so you call that kind of formation a divergence. Okay, so now you can see that a divergence is clearly formed. Okay, so now you want a confirmation candle. So you can see the confirmation candle was the hammer. You can see this hammer, although the hammer, the red hammer. And by the way, I want you guys must never trade a confirmation candle in the color of the trend. Okay, so if you're trading a put option, that means you're saying that you expect the price to drop. Okay, and then you placed a sell option. Your confirmation candle must be in the direction of your trade. It must be red, meaning that you're expecting price to go down. Okay, so the danger of the disadvantage of trading a confirmation candle having the color of the trend, the previous trend, is this: it tells you that there is still some form or measure of strength in the trend. Okay, so you want to make sure that your confirmation candle is clearly indicating the color of the new trend. Okay, so if you're trading a sell and you're trading a sell option, okay, you want to make sure that the confirmation candle, be it a Marubozu, a shooting star, or a what do they call it, a star, is clearly indicating the red. Okay, so now I always mix up the hammer and the shooting star. They are very much alike, so bear with me if I interchange them. Okay, but I hope you guys understand. Okay, so this is not the armor. Okay, when you see um, this kind of formation, it's called a shooting star. Okay, so the shooting star is an inverted form of the armor. Okay, in the opposite, in an uptrend. Okay, so the shooting star is an inverted for armor, is an inverted armor in an uptrend. Okay, so you can see that this inverted armor occurred in an uptrend. So when you see something like this, it indicates that at some point in the market, the bulls were in control. Then it was a sudden switch in autonomy. You can see that the bears suddenly crashed down the price and pushed it back here to form a shooting star. Okay, so you can see a shooting star is clearly formed here. There's a red shooting star over here. Okay, so let me move this. There's a clear shooting star over here. Okay, so you can see that this is a clear shooting star. Okay, so and when you see a formation like this, it tells you that the bears are in full control. No, the bears are not yet in full control. The bears are gaining, that's the word, gaining momentum. Okay, so the bears are gaining momentum, right? So when you see this, so the next thing you need to do is you have to wait for a cut back. After confirming the divergence on the RSI, you wait for a cut back. Okay, but since the body of this particular shooting star is very small, you might want to wait for the cut back to the middle. So you might want to choose the middle of this this week for the ideal position for a retracement or a cutback. Okay, so you're going to wait for price to cut back to the middle of this week. The week, you can see the long week. The shooting star has a long week, so you want to wait for price to retrace and cut back to this middle, to the middle of the week, because the candle, the body of the candle is very insignificant. It's not significant enough for you to pick the upper body or the lower body. Okay, so now since you can't pick the upper and lower body on the real body, okay, so you can either use you can actually use the week. So you go to the week of the confirmation candle, which is this shooting star, and then you select the middle as the retracement point. So as soon as price retraces back to this point, to the middle of this shooting star, and as soon as it touches the middle of this shooting star, you place a 5 minutes trade, a 5 minutes call, a put option, meaning that you trade a sell option down. The call option is up, the put option is down. Okay, so you're putting something down, you are putting something into a basket, so that's down. So the way you put something in a basket or in a drum, you can't put it up, so you put it down into, you put something into something. Okay, so the put means to put something from up down, so it means a down trade. Okay, so you're going to wait for a retracement to the middle level of this week, of the shooting stars week. Okay, so as soon as price retraces back to the middle line of this week, so the next thing you need to do is to place a 5 minutes trade, a new 5 minutes trade. Don't trade 4 minutes 56 seconds. Don't place an expiry on 4 minutes 56 seconds. Never place the expiration time at 4 minutes 55 seconds. Make sure that the 5 minutes is complete. Okay, so you place the trade, you place the expiration time at a full 5 minutes, which is this. Okay, so you can see that immediately after this happened, the next 5 minutes was a winning trade. You can see it clearly went down from this level. Okay, So the next one is we're still on the euro gravity pounds. This is another formation. Okay, so you can clearly see it. So price moved out of the Bollinger Band, retraced back into the Bollinger Band, came back out of the Bollinger Band, and retraced back into the Bollinger Band. And see, the confirmation candle is over here, which is a star. And then you wait for price to retrace back to the lower body, the lower body of the confirmation candle, this green confirmation candle, before placing a fresh 5-minute trade. You can see it's a clear win. Okay, so this is another example. Price closes out of the Bollinger Band and retraces back into the Bollinger Band. Price cuts, breaks through the previous support level. This price breaks through the previous support level. You can see it clearly breaks this support level. After the retracement back into the Bollinger Band, there's a break in the previous support level by this strong bearish Marubozu. Okay, so immediately after that you can see it, and also on the RSI there is a divergence. Okay, meaning a lower low produce a higher low on the RSI, so that is a divergence. Okay, so you're looking for a confirmation candle next. So you can see this good hammer. The hammer formed very well and it formed a green color. Okay, meaning that it formed a green color in the direction of your new trend, your proposed trade. Okay, so you are going to be placing a call option. That means an option to buy this asset. Okay, but the hammer must be in the direction, the color must be in the direction of the proposed new trade, or the proposed new direction. Okay, so the proposed direction. Okay, so you feel that it's going up, so the confirmation candle must carry the color of the new direction or the new trend. Okay, so but you have to wait for a cut back to the lower body of the confirmation candle, which is this hammer. So you wait for a cut back and you trade a fresh 5 minutes. Okay, you can see it. So it wasn't a clear win, but I think it was a strike even. It was you got your money back, or even if it was a losing trade, that only tells you that you're going to lose 1 out of 10. Okay, so there's no system that is 100% perfect or accurate, but this system is 90% accurate. You are winning 9 out of 10. Okay, so but this wasn't a clear win. It's either you got your money back or you lost your money. Okay, but it's not a problem because you're going to be winning 9 out of 10 trades. Okay, let's move on. Okay, so the AUD USD, you can clearly see this. There's a break out of the Bollinger Band, and the strength is confirmed by the break out of the break below the 30 RSI level, followed by a cut back, a retracement back into the RSI, back into the Bollinger Band, followed by a continuation and a break of the previous support level. Price continue going down, and so there's a formation of a confirmation Marubozu over here. You can see the Marubozu formed over here. So, and then it correlates with the RSI. There is a divergence formed on the RSI, meaning this level and this level does not correspond with this level and this level. You can see it on the candlestick chart. On the candlestick chart, there is a lower low formation is what you can see, but on the RSI you can see this level is actually lower than this level. So on the RSI you are seeing, on the relative strength index, you are experiencing a higher low, whereas on the candlestick chart you are seeing a lower low. So whenever the candlestick does not agree with the RSI, a divergence has occurred. Okay, so there's a clear divergence here. You can see it. There is a higher low. This level is lower than this level. So this level is higher than this level. So it's called the higher low. Okay, so but you can see it here. This level formed a low. So it's lower than this level. So it's a lower low. Okay, so this formed a lower low. This formed a higher low. Okay, so lower low, higher low, because this level is higher than this low point here. So higher low, lower low. Okay, so you can see one is lower low, one is higher low. You can see they are not the same. Okay, so when you see a lower low and a higher low, it's called a divergence. Okay, so when the divergence is confirmed by this bullish Marubozu over here, so this confirms a reversal. Okay, this confirms a reversal, but you don't trade immediately. You wait for a cut back to the lower body of the confirmation candle. You wait for a cut back you wait for a cut back to the lower low, to the lower body, to the lower body of the confirmation candle of this Marubozu, this green Marubozu over here. So you wait for a cut back to this level over here, to this level, to the lower body. As soon as price touches this lower body, you place a call option, you place a buy option, a buy trade. Okay, you can see it. This is a clear win, although it formed a red color, is clearly higher than this level here. So that's why you have to always wait for a cut back. You can see that the cut back, this level is lower than this level over here. Okay, so you can see this level is where you enter the trade, and you can see the difference from this level to this level. You can see this level, all you need in binary options is just one small peep. Okay, so a peep is equivalent to a winning trade. Okay, so you won this trade also. Okay, so let's move on. So this is also AUD USD. This is a 5 minutes. Okay, so you're waiting for a cross below the Bollinger Band, a cross below out of the Bollinger Band, and then you want a cross out of the RSI also, and then you want it to retrace back into the Bollinger Band and then come out and cross this previous support level, and so you clearly crossed it down and it formed the confirmation Marubozu over here. You can see it, and then there is a divergence also formed on the RSI, and then after then you don't trade immediately. You see the confirmation candle, you wait for a retracement to this level, to the lower level. You can see this is close to the lower level, so you wait for retracement back to the lower body of the Marubozu, which is the confirmation candle. This green Marubozu over here is a confirmation candle, is a sign of a reversal. Okay, so you wait for a cut back to this level, and you trade the touch of this lower level over here, and then you make sure you don't trade immediately. Always wait for a retracement, a cut back to the lower body of the candle, or the upper body of the candle, depending on whether it's in a downtrend or uptrend. Okay, so but this is a downtrend, so you wait for a cut back to the lower level, lower body of the confirmation candle, this Marubozu, green Marubozu. Okay, so you wait for the cut back, and then you enter the trade. Okay, so immediately after the cut back, you can see that there is a winning trade. Okay, let's move on. AUD USD, let's do this again. You can see there's a break of the Bollinger Band over here, and then retracement, and then there's a trend continuation and a break of the previous support level, and then there is a formation of this candlestick. It looks like AMA. It looks like a Marubozu too, so it's more like a Marubozu and AMA combined. Okay, so which makes it very powerful. Okay, so you can see when two candles combine, it's usually very powerful. Okay, two confirmation candles combined to form a candlestick is usually very powerful. So you can see this is like a hammer combined with a marubozu. Okay, so then you wait for a retracement back to the lower body of the confirmation candle, which is here. As soon as price retraces back and touches this lower body over here, you trade a full 5 minutes, not 4.56, not 4.55. Make sure your expiration time is exactly 5 minutes or more. Okay, so you move to the next 5 minutes expiry and you select the next 5 minutes expiry. Make sure it's 5 minutes. Make sure it's 5 minutes expiry. Make sure it's 5 minutes on 5-minute dots. You don't trade. Okay, you can trade 5 minutes plus 3, 5 minutes plus 4, but never trade less than 5 minutes. Okay, so you can trade 9 minutes, you can trade 8 minutes, you can trade 7 minutes, but never trade 4 minutes, never trade 4.55 minutes. Okay, so you wait for a cut back to this level before you place your trade in the direction that's a call option, that the direction of the bulls. Okay, so this is a winning trade. Let's move on. This is another one. Okay, so you wait for price to cut, to move out of the Bollinger Band. You see the strong move out of the Bollinger Band. You see the price closes out to outside the Bollinger Band. Then you wait for a cut back. You wait for the cut back, and then you wait for price to cross the previous resistance level, which you can see price crossed it. And then when this is formed, and then at the same time make sure that the RSI is obeying the divergence rule, then you see the confirmation candle formed here, and then a retracement back to this level is your entry. So you see price retrace back to this level, and so you place 5 minutes entry. So you can see there is a clear win. Okay, another thing I want to tell you guys is that make sure you do not trade things like these markets that are squeezing. You can see this is a squeeze. Don't trade narrow bands. Never trade extremely volatile assets that are moving very in large volumes. Okay, you will see it. It's usually a surge in the movement from a low to a high. Okay, so it's like a sudden rise in price, okay, of an asset. That is called a volatile currency or volatile assets. Never trade volatile assets. Okay, so very important. Okay, so as soon as price the divergence is confirmed here, you wait. You don't trade immediately. You trade after the price retraces back to the upper body of the confirmation candle. And another thing I want you guys to bear in mind is this: never trade too close to the middle, the 14-day moving average, which is the middle line in the Bollinger Band. The reason why I place this trade is because, or the reason why I chose this as an example is this: there was a cut back to this level, to this upper body of the confirmation candle, and I knew that this space from year to year is enough to accommodate one more candle. Okay, but never trade too close to this middle Bollinger Band, which is a 14-day moving average. Let's move on. Okay, this is another example. You can see price closed out. It closed out of the Bollinger Band, then retrace back into the band, then move. You see the price crossed the previous resistance level, and then a confirmation candle is formed. This is like a star, or it's like a big star. Okay, so you can see after the confirmation candle, you don't trade immediately. You wait for a retracement back to the you wait for a retracement for price to cut back to the previous the higher body. That's the upper body of the confirmation candle, which is here. So as soon as price touches this upper body, you place a fresh 5 minutes. You place a 5 minutes trade. You can see it's a clear win. Okay, so let's move on. And you have to make sure the divergence is also obeyed. You can see divergence was obeyed here and here. Okay, so the euro, Great British pounds, you can see price crossed price crossed out, right? Price crossed out, retraced back into the band, right? Retraced back into the band and went out again, and you see it. We move faster than, okay, we've done this, okay, we're here now. Okay, so you can see price could not cross this Bollinger Band. You see, it was a slight crossing. You can see the majority of this candlestick, the body of the candlestick is still inside the Bollinger Band. Okay, you can see it. So this candle tells me that the price is not moving out of the band again. Okay, so and then the confirmation candle is formed here. Okay, but you have to wait for a retracement to the lower body of the confirmation candle before you enter. You can see it's a winning trade, and divergence was also obeyed. Okay, so you can see a cross on the Bollinger Band, the lower Bollinger Band. Price crossed it clearly, then retraced back into the band, then continued, the trend continued and crossed the previous support level. You can see price crosses it clearly. Then there's a divergence also on the RSI. You can see it down there. There's a divergence. The RSI did not move higher. This was going, the RSI did not move lower, sorry. This was going lower, but the RSI did not move lower. Okay, so this candle crossed the previous support level, and immediately after it crossed the previous support level here, you can see a confirmation candle formed here like a star. Okay, a confirmation candle in the direction of your new trend, the green. You know, you're trading a reversal, so you must trade in the opposite direction of the trend, in the opposite color. So your confirmation candle must carry a color in the opposite, an opposite color to the trend's color. Okay, so the trend is red, so your confirmation candle must be green. Okay, so you can see this is a confirmation candle, but you must wait for price to retrace back to the lower body of this confirmation candle, and you see price retraced perfectly. Okay, and then you enter a fresh 5-minute trade. You see it's a clear win. Okay, so this is another example. Price close out of the Bollinger Band, clearly indicative of a strong bearish momentum. Okay, and the RSI also closed below the 30 oversold level, indicating strong momentum. Price retraced back into the Bollinger Band, and then price crossed the previous support level. This candle crossed the previous support level, and then price did not close strongly out of the Bollinger Band. You can see it, indicating that the downward momentum is over. Okay, and then you can trace it down. You can see that the Bollinger Band, a higher low is actually formed here. You can see it's a higher low. This is a low, this is a high, this is a low, this is a higher low, whereas this formed a lower low. Price moved lower on the chart. Price moved lower from up to down. It moved lower on the candlestick chart, whereas on the RSI, price moved higher. So a lower low is formed here on the chart, but a higher low is formed on the RSI chart. You can see a lower low is formed on the chart, and a higher low is formed on the RSI chart, indicating divergence. So after divergence, you wait for a confirmation candle, this green confirmation candle, which is a strong Marubozu combined with a hammer. So you can see Marubozu hammer. So and then you wait for a cut back to the lower body, the lower body of the confirmation candle. So you can see price will cut back, wait for the cut back, and then you place a trade, a call option. That is an option to buy. Okay, buy option. So you can see price clearly. It's 5 minutes. Make sure it's 5 minutes, not less than 5 minutes. It must be 5 minutes, not 4.5, not 4.56, not 4.55. Okay, you see it's a clear win. Okay, so let's move on. Okay, so price crossed here. crossed here, crossed the Bollinger Band, moved back into the band, then crossed the support level, crossed the support level, and it could not cross the Bollinger Band. So the price tagged along the Bollinger Band within the band, indicating that momentum has dropped. You can see it crossed here strongly, and so there's a drop in the momentum. The bears are becoming very weak. So as soon as price failed to cross the Bollinger Band here, and there was a confirmation candle here, this confirmation candle is a what? Is a hammer. Okay, so and then you can see over here too, there is a confirmation. There is a confirmation over here too. You can see it. There's a confirmation here over here. The price close lower here. You can see a higher low is formed here, whereas a lower low is formed here. A lower low, higher low, lower low on the chart, higher low on the RSI, lower low on the chart, higher low on the RSI. Okay, so you place a 5 minutes, you wait for retracement to this level, to the lower body of the hammer, and place a trade, a new 5 minutes trade, which is this is the winning candle. You trade a fresh 5 minutes. It must be completely 5 minutes, not 4.56. Okay, so let's take the last one now. This is the last one now. You can see price moved out of the Bollinger Band and retraced back into the band. Okay, then there is a cross of this previous resistance level. This candle crossed this level, and then there is a candle here. You see, it did not form. It almost formed the hammer. Sorry, it almost formed the shooting star. Okay, so because it didn't form the shooting star, you can't place this trade. Okay, so but if you had formed the shooting star, you will have placed a trade. So this is not a trade. This is a bad trade. If you had placed a trade, you will have lost it. Okay, because this confirmation candle is not a shooting star. So you have to learn the shooting star very well. It's not a shooting star, and it's not a star, and it's not a Maribozu also. So this is not a shooting star. You can see the wick. This is not a shooting star. This is more like it's more like a doji and a spinning top. And like I said, you never trade spinning top. So this is a spinning top. Okay, so never trade a spinning top. This is a spinning top. Never trade a spinning top. So this confirmation candle is a spinning top, and so you must never trade a spinning top as a confirmation. Okay, so I hope you guys were richly blessed by today's teaching. I'm looking forward to seeing you guys tomorrow. We'll continue the trading with the Amstar. That's what we'll be doing till we'll conclude this challenge. Thank you once again. Bye.